The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. My name is Stacy Yamali, Vice President of Sales and Account Management with Cfra. I would like to welcome you today to our webinar by AdvisoryWorld and Cfra, Find and Analyze New Investments with Portfolio Tools. During today's session, we will hear from Ryan Smith from AdvisoryWorld as he walks us through how to use our hypothetical illustration and analysis tools to create hypothetical portfolios tailored to clients' needs. Ryan is the Director of Client Relations at AdvisoryWorld. Prior to AdvisoryWorld, Ryan worked on the trading desk of a mid-sized brokerage firm in Des Moines, Iowa. He then earned his journalism degree and moved to Reuters America in New York, where he covered structured finance debt markets. Ryan currently resides in San Diego, California, with his wife and son. Joined by Ryan today is Mike Wilson, President and CEO of AdvisoryWorld. Before we get started, I wanted to remind you that today's session is being recorded, and a link to the recording will be made available within the next few business days. During today's session, you may submit questions using the GoToWebinar questions panel, and we will do our very best to answer as many as we can. Before we dive in, I'd like to provide some context on Cfra and our relationship with AdvisoryWorld. I'll also give you some context on Cfra's solutions for equity and fund research and our MarketScope Advisor platform. Founded in 1994, Cfra began as an independent research firm providing forensic accounting research to institutional investors. Over the years, Cfra has diversified its research offering by adding legal research in 2006 and fundamental research in 2016 through the acquisition of S&P Global. S&P Global's equity and fund research business originated in the 1920s and has amassed a worldwide base of investing clients. Cfra began its partnership with AdvisoryWorld in 2008. Our partnership combines Cfra's diverse research offerings with AdvisoryWorld's portfolio management tools. Our mission is to provide our subscribers with global, independent, and actionable research and analytics to help make better investment and business decisions. For the purpose of this webinar, we will focus on our fundamental research offerings on Cfra's proprietary platform, MarketScope Advisor. Ryan Smith will walk you through how we partner with AdvisoryWorld to bring a complete portfolio management solution to our wealth advisor clients. Cfra's global subscribers include the world's leading institutional investors, wealth advisors, corporations, academics, and governments. Cfra is committed to be the world's leading independent investment research firm with over 75 global analysts, authoring in-depth qualitative research on over 1,500 companies. In addition, Cfra's quantitative research covers approximately 11,500 global companies. Our analysts cover 11 broad sectors, 68 industries, approximately 1,800 ETFs, and over 22,000 mutual funds. Cfra aggressively invests in its employees, product offerings, and innovative technology to consistently bring enhanced value to over 2,000 global clients. On this slide, I'd like to highlight that Cfra is purely a research service. We do not manage money or make trades. Research is our sole focus. As I mentioned earlier, Cfra covers a broad range of investment types, including our STARS-rated stock reports, ETF and mutual fund research, bond and options research. Cfra also provides industry research, extensive market commentary, news, thematic research, all on our MarketScope Advisor platform. MarketScope Advisor provides our wealth advisor clients with robust portfolio analysis tools through our partnership with AdvisoryWorld. I will now hand off to AdvisoryWorld to provide a little more background on our partnership with Cfra.
Thanks, Stacy. This is Mike Wilson with AdvisoryWorld, and as Stacy mentioned, we have had an excellent long-standing relationship with Cfra. and with the advisory community at large. Our core competencies at AdvisoryWorld are investment analytics, portfolio construction, and proposal generation. And today we're going to focus primarily on the portfolio construction and analysis components and the proposal generation pieces. As mentioned, we've worked with the advisory community since the late 80s. We have investment management at our core. The company was founded by a former institutional advisor. You'll look at us as being a value-added alternative to Morningstar, amongst other things. We listen to a lot of advisors who have told us many times they sit down with clients and prospects and present a Morningstar report to them, and they're met with the question from their client or the prospect that says, well, I can get this report just about anywhere. What do you do different for me? And you'll notice today, as Ryan does a presentation for you, that the type of reports that you're able to access through CFRA and the tool that we provide through CFRA will give you that differentiation factor that you need to compete. All of our products are driven by customer demand. As I mentioned, we do have wealth management at our core, but just about everything we do is based on what we've gathered over the past 30 plus years from the advisory community. And in general, the main purpose for using our technology is to help you as an advisor to attract and retain more assets. The first part of attracting assets, there's a pretty basic equation whereby you can look at someone's existing assets that are held away. Perhaps they give you a statement as an advisor, and then compare them versus one of your suggested models, right? And be able to showcase the type of skills that you have as an advisor, how you can improve their diversification. Maybe you have better asset allocation. Perhaps you can improve their performance, at least in a hypothetical manner, reduce their fees, lower their concentration in individual investments. There's a whole bevy of analytics that are going to help you make those type of sales. And then with your existing book, the way you can make your practice stickier is by providing, again, value-added technology and analytics to your client base. Again, you're looking to analyze your client's existing assets, make sure that they're in line with their stated investment objectives and goals. And with that, you're able to run holding scan reports. CFRA's incredible research is accessible through these tools, of course. And that, again, helps you build trust with your clients and, at the end of the day, help you to retain more of their assets.
Thanks, Mike. My name is Ryan. I'm the Director of Client Relations here at AdvisoryWorld. And so now I'm going to show you a little bit about the portfolio tool within CFRA. All information in this example is hypothetical in nature and not intended as a recommendation. Now, once you log into the MarketScope Advisor, click on Portfolio Analysis along the top of the page, and you'll automatically be logged into our proposal tool. Any saved proposals will be saved in the white area below here with blue hyperlinks that will allow you to access them. To start a new hypothetical, simply hit New Hypothetical where the green arrow is, and it'll take you to this particular page right here. At the very top, under section 1.1, there are a multitude of ways to get data into the system. One of the things that we pride ourselves on is setting up as many avenues for best practice situations that we can. Several of the ways that you can get information into the system is importing through some of our third-party integrations. You can also import via Excel spreadsheet. You can also import manually in the text box there under 1.1. Once you add tickers to that area or import information, you'll see those tickers and assets under 1.2. Verify what those are, and then you'll see them right there. If everything lines up, simply click the Add button in the middle of the page. and you'll see those in section 1.3. You can then name this proposal in section 1.4 at the very bottom. In this particular instance, we did sample prospect funds. The naming convention for this is illustration N+1. So if this illustration had originally been illustration 10, the very next one would be defaulted to illustration 11. Within our system, anytime you want to save or anytime you want to move to the next page, you can simply hit next or the tab at the very top. If you do hit next or back, it will automatically save. If you hit utilize the tabs, any new information they will ask you to save. If you have not changed any information, it will automatically move you to the next tab. In this particular instance, we're going to go to the allocations page. There are a multitude of ways to go about this particular information. However, we do suggest clicking on Portfolio of Investments in section 2.1. This is what jumpstarts our analytics and allows you to see all the wonderful MPT stats and comparison and analytics that we have to offer. We do suggest using a percentage of portfolio or dollar allocation method, and you simply just input that information in 2.3. If you do suggest a percentage of portfolio, say for a model comparison, you would be asked to input the value of the portfolio so that the percentages entered in 2.3 then calculate. And you'll see we chose dollar on this particular example. Next is section 2.5, and this is one of the more important sections. This is our time horizon or length of portfolio time horizon. The default is always common asset inception, in this case, April 15th, 1984. But you also have several other choices. Common asset share class inception, that would be the share class of the asset, and when it first came online. The one that we like to point out most to our clients is the common asset share class and index inception date. That is the date of the benchmark. Now, a little primer on that. Our system is predicated on backfilling historical data when necessary. We always try to go with live data, but sometimes in order to line everything up, we do have to backfill a certain asset or two. Those assets will be backfilled using their benchmarks. A default is in our system as Lipper, but you can always make changes within the system to Dow Jones, S&P, some Russell, and a bunch of other ones. MSCI is one of those as well. But essentially, common asset, share class, and index inception is as far back as the particular portfolio with these assets can go. In this particular instance, April 15th, 1984 is also the index inception date, which means that is when the newest of the benchmarks came online.
Let me give you a real quick example of why that's so important that we allow that functionality. If you were to include, let's say, a mutual fund, stock, or ETF in this analysis that's only been around for, I don't know, say a year and a half, and you were to use the common asset inception, well, then you can only run your hypothetical backtest in that scenario for a year and a half. However, given our business logic where we'll prepend performance using backfilled index returns, you're able to look back, say, I don't know, 10 years if you'd like to, or 15 years to incorporate the Great Recession. And from an analytical perspective and a comparative perspective, it just gives you a huge leg up.
One thing I'd like to add as well is you can always add a custom date as well. So you have your choices of 1, 3, 5, 10, and 15 years, your common asset inception date, your benchmark inception date or the index inception date, and essentially a custom date that can be set any time after that index inception date. And then at the very end, once you set your time horizon, there's also the rebalancing factor if you want to, none, quarterly, semi-annually, or annually. What will occur in that particular instance is that the original percentages of the allocation entered above will be reset on that date. All right, and then once again, if you click next, everything will automatically save, and then we go to our fee page. One of the nice things that we've set up here is the ability to hit apply global settings and set all the fees for all assets within the portfolio to be equal. For example, if I have a wrap fee of 1% per year billed quarterly, I would merely put a fee of 0.25% in the wrap fee. My wrap fee frequency would be quarterly, and then I could go ahead and make sure that that is applicable to all assets. Within Apply Global Settings, you can also change sales charges, transaction fees, and the like. One thing that we'll skip over in this particular aspect is the cash flow tab, number 4 there at the top, and we'll go straight into number 5. The cash flow tab is set up to apply any cash flows that occurred before today. And so what you can do there is, if I have a withdrawal that was 5 or 6 years ago for a hospital bill or a home renovation that I wanted to show within the portfolio, I could do that. Likewise, if I wanted to show the difference between adding $1,000 at the beginning of the year versus $100 per month throughout the year, and see how that compares, I can do that as well. But the one thing to remember with cash flows is it needed to have occurred before today. Next, we go into the number 5 tab. This is where the reports feature are. If you don't like the name of the portfolio that you put or want to show something different on a report, you can put a different name at the top, and that will show on any cover page that you show. You can also apply tax rates if those are applicable. Down here below, you'll see our particular reports. We have a cover page in which you can set some different parameters, show the name of the advisor, the date, a logo if necessary. We also have fact sheets, which will print out all of the various information that we have on a particular asset. And then we have our more common reports, the hypothetical performance, holding scan, and compare scan. Investment reports is a report that is CFRA and S&P data driven, using some of our setups as well. The ones that we'll go into for today are the hypothetical report, the investment report, and the holding scan. The holding scan would be very similar to a Morningstar X-ray report, a bird's eye view of the portfolio as a whole without comparisons to another portfolio. The compare scan would be a holding scan, 2 holding scans side by side without a direct comparison. To change any parameters within a report, simply hit the parameters key and you'll be given some choices. Within the holding scan, we keep it pretty simple. Pie chart grouping by class, subcategory, category, or investment. You can also apply cash flows to benchmarks if you entered something in tab number 4. And you can also change or select the benchmark associated with this particular portfolio. At the very bottom of the screen here, you'll see weighted asset class benchmark. That will take that limper benchmark assigned to each individual asset, use the allocation for that underlying asset, and apply that allocation to the benchmark, giving you an apples to apples direct on the fly comparison. This is the default we have for most of our portfolios, but we do allow for other options as well. On the left side of the screen here, you'll see some indexes. This one shows S&P comp with price only, along with a few Russells. There are about 200 in this list that you can choose from, and you can essentially show this as the benchmark for the entire portfolio. If the weighted asset class benchmark or a specific benchmark is not your cup of tea, you can create a new blended benchmark that you'll see on the right here. One nice thing about this is that anytime you save one in this particular area off to the right, it will be available for all future portfolios. So we have a lot of people who will set up a 60-40 or an 80-20 or a 70-30 with the given benchmarks that they like, and then they can make sure that all reports show similar information. One thing we do suggest is running 3 reports or less at one time. There is a lot of information in these reports, and some browsers have timeout features which can take a little bit longer to generate. So we always suggest running 3 or fewer along with the cover page. And once you've made your choices, simply hit Build Report. Now, this would be the hypothetical illustration. This is a back testing of current allocations. You'll see a chart at the top. Within all of our reports, you'll see a graph with a chart to the right or underneath it. In this particular instance, it's off to the right. You'll also see a summary of the beginning value, any reinvestment, any charges or fees with an ending market value, and a cumulative return. In the upper right, you'll see the net investments, the ending market value, cumulative return, average annualized return, and any tax or account assumptions. And in the bottom, you'll see a yearly breakdown of the summary that you saw in the middle. Within our holding scan, that's the bird's eye view report, you'll see a macro allocation at the top of page 1 with an asset allocation next to it. That asset allocation is tied to the benchmarks itself. The macro allocation shows you underlying funds within any equities or mutual funds, ETFs, or other breakdowns. Within the holding scan itself, we have this wonderful page right here that shows properties of the underlying assets themselves. This comes to us from our data providers. You'll see equity properties in the upper left-hand corner, average market cap, average PE, average price to book. In the middle section, you'll see any fixed income properties, if applicable. You'll have average coupon, the breakdown by tranche, and in the upper right, one of our more popular features, metrics, where you can see the average expense, average turnover, and 12-month yield for the portfolio, if applicable. You'll also see top 10 equity sectors for underlying assets, top 10 equity countries of domicile, and then I think this is at the very bottom of this, I think is one of our best value adds, the top 10 equity holdings. This will break down any asset, ETF, mutual fund, and show its underlying holdings. This is what I consider to be our best value add because it shows true diversification. An example I like to give out is that we had a gentleman call in with a highly researched portfolio of about 35 mutual funds. He thought he had gone through and done an excellent job of making sure he was diversified. And to be honest, he had. Every single mutual fund had a different category, a different manager. He had done his research. But one thing that he had not realized is that with some of these large international multi-conglomerate companies, they are found in many different sectors. And so this gentleman had some diversification issues that he needed to resolve because there were certain assets that were more than 7% of his portfolio, even though he thought he was diversified. The way he found that out was in this particular example. You'll see that Amazon at the very top has a particular holding in one of the mutual funds that we have in our portfolio here. Amazon would be 1.55% of the overall portfolio based on the allocation of the mutual fund it's held in. That's because 6.19% of that particular mutual fund is Amazon. So when you start to add 30 to 35 assets, all mutual funds, all with different underlying assets, you can quickly see that overexposure could be a particular problem. Well, the gentleman in the example that I gave earlier was able to go through, make changes to about 3 or 4 different mutual funds, and he completely solved his diversification issue. Within the holding scan, you'll also see a chart that shows trailing performance of our portfolio in red versus the benchmark in blue. Those colors can be changed within the portfolio. Risk versus return, this would be a standard deviation versus return chart. And again, you'll see the information comprised in the graph directly below that in the chart. We also have a best and worst case analysis for three months, 1 year, and 3 years. And then this is the CFRA research investment report. We like to show this for our CFRA clients. It has a different look than our reports. This is a CFRA report that combines both our data and the CFRA S&P Global data. Next, we'll move into a compare scan. This is a holding scan side by side. You can change parameters here as well. Top line will always be the portfolio that you're in, and you can choose from previous portfolios, or you can tie it to a particular asset as well. Click Save, generate the report, and the output looks like this, where the two portfolios are comparing against each other with some additional S&P or MPT stats for 1, 3, 5, and since inception as well. You'll also see the metrics for both current and target, side by side without a direct comparison. And as far as
so you'll see right here, I mean, as Ryan told you before, one of the more popular ways to look at these reports, amongst all the other items, is the expense element. And you'll notice straight off that this current portfolio compared to the target portfolio has a 69 basis point average expense as opposed to a 9 basis point average expense. So right then and there, aside from all the diversification statistics, aside from all the performance enhancements, on a straight dollar for dollar base, breakdown, you're providing them with 60 basis points less of an average expense per year. And the writing's on the wall. Given fee compression, this is a major discussion I'm sure you're having with a lot of your own peers, and let alone with your own clients. So amongst other things, again, this is a really nice feature set. What Ryan just ran you through, of course, was the ability to quickly enter in a portfolio of mutual funds, run a series of analytics, including a hypothetical illustration and the holding scan, generate research reports for all of those holdings, and with one click. And then with a couple more clicks of the mouse, he was able to say, listen, I want to look at a compare scan, pitting that client or prospect's existing portfolio against one of my suggested models. This happens to be, you see, it's an ETF model, right? So for obvious reasons, it has a lower expense. But the application, again, it's super fast. It's intuitive, and once you get into rhythm using it, you'll never want to stop.
Now we can go ahead and open the floor to any questions that anyone has.
Thank you, Ryan. We are pulling up some questions right now. Here's the first one. Can I include international funds or options in a portfolio?
In our database, we are not able to track international funds. We don't do pink sheets. Our data providers don't provide data on pink sheets, penny stocks, options, warrants. We do pretty much any equity or fixed income domiciled in the United States and trading on the United States market.
And let me expand on that a little bit. When you say international funds, I assume you're referring to funds that are domiciled outside the United States. Of course, any U.S. domiciled mutual fund that happens to be an international related fund, we can analyze it. To go on a little bit further about the options front, we do have at least one index that tracks options. So what many of our users do in the scenario when they want to include an option in the portfolios, they'll include that index. I believe it's a buy right index or what have you, and be able to at least back test with some type of a good proxy.
Great, thank you for that. Second question is the backfilled data always linked to a benchmark? And can I link it to another asset?
Yes. So let's say, for example, someone didn't like the category of a large company, for example, like Apple. The default benchmark for Apple is the Lipper Large Cap Growth Fund. If for some reason someone thought that it should be tied to the Russell 2000, they can definitely tie that to the Russell 2000. Within the system as well, you can tie it to basically any benchmark that you want. Unfortunately, you would not be able to tie it to, say, another asset like Google. But you can tie it to any benchmark you want. We do have a lot of people who use proxies pretty well. We have a benchmark listing of over 5,500 different benchmarks to choose from. And so we've found that nearly all of our clients are able to find what they need when they need to.
And while Ryan points out that through the application UI, you cannot choose another investment to backfill with, if there is some type of a one-off that you need that type of setup, we can do it for you on the back end. I could give you an example. We work with many TAMPs that will have manager return series that are live, and then they'll ask us to prepend that performance with effectively back-tested indexes that they blend themselves. And so we'll work on that we work on that quite a bit. So if you have some type of a special use case, we'd be happy to handle that for you.
Great, thank you. The next question is, can you choose to use the 11 sector GIC as opposed to LIPR sub-industries?
That is not something that we're currently supporting. However, it is my understanding that CFRA and we are laying some preliminary groundwork to expand our sector coverage and potentially include GIC sectors there. So it's not a feature right now, but there's a good chance it will be in 2019.
Great, thank you. The next question is, can I link this program to my CRM or brokerage accounts to import some of that information? We actually got a few questions related to integration.
Okay, we do. We have several integration partners. We have CRM-based integration partners like Redtail, where information can flow both ways. We have BD integration partners. We also integrate with TDA, TD Ameritrade, so account information can be pulled over as well. Orion is another one where account information will pull over. Some of these integrations do allow AdvisoryWorld reports to be ran from their platform as well. But anytime someone has an integration partner that they have questions about, I would suggest that they reach out to the CFRA desk at cservices@cfraresearch.com. And if they have any questions, they'll reach out to us. But we're always more than happy to assist anyone in trying to get connected with a third party to get some of their information over. If not, we do have the Excel import feature that I do believe is a very quick manual data entry method for getting account information over as well.
Yeah, but again, I would say the most tried and true third-party integrations are firms like Redtail, Orion, Albridge, Black Diamond, MoneyGuide Pro. Those are all firms that we do a lot of work together today.
Great, thank you for that. We have one last question. Are closed-end funds in your database?
Yes, they are.
All right, quick and easy. Looks like that is it for questions. In terms of next steps, please check out CFRA's Market Scope Advisor for our latest research, as well as more information about the hypothetical illustration and analysis tools and features that you saw today. If you are not currently a subscriber of Market Scope Advisor, please contact us at cservices@cfraresearch.com or visit our website, www.cfraresearch.com, to learn more about it and to receive a complimentary 2-week trial. And on behalf of the team at CFRA, we would like to thank you for joining us today. Within the next day, you will receive a note from us with a link to the replay and slides from today's session. Should you have any questions, please don't hesitate to contact us at cservices@cfraresearch.com. Once again, thank you for joining us today.